Good morning, traders. I'm Dennis Dick.
And I'm Joel Elconin. Welcome to Premarket Info.
While today's show, Hewlett Packard disappoints the street, trading down $1 in the pre-market. Guess and Big Lots disappoint the street. Does anybody not disappoint the street anymore? Best Buy and Schulze are talking again. New York Times reporting that Best Buy obviously looking for some other options since they're not doing very well on their own. Gold stocks have been on a run here. We'll look at Barrick Gold, we'll look at Goldcorp, we'll look at Newmont Mining, but are they ready for a turn? And some of your defensive stocks continue to remain weak. We've seen a breakdown again in Coke yesterday and Verizon. Defensive names are not in favor right now.
Well, that Hewlett Packard news on the heels of the Dell news shouldn't be a real shocker to the street here, but nevertheless, it's trading down significantly in the pre-market. We have bottomed 1812 and gaining a little momentum off that. The key number you have to look at has been the low of the move here at 1741. Still a stick away from it, so we might not get there today.
I mean, this is your classic value trap. The company loses money. They have a write-down, $9 billion loss on a write-down from electronic data systems. If you back that out, their continuing operations made $1 against estimates of 98 cents. But you still got to back out a $9 billion loss. They're talking about cutting another 11,000 employees by October. Their guidance was light. They're guiding 405 to 407. So this is why it's a value trap. Because, okay, they're guiding for the next year to make $4, and you do the math on that, and you're like, wow, this thing's got a PE of 6 or 7, or even less than that, actually. So it seems like, actually, what would the PE? It would be like four on that, 4 or 5. So you think all kinds of value here, but I don't see how they're going to continue to deliver $4 in earnings for the foreseeable future. Just Apple is eating their lunch. So you've got to think eventually those earnings are going to come down for, if not next year, the year after. And that's the trouble here, Joel.
Yeah, there's just nothing positive about this stock we can say, so I think you have to buy it on the open.
Well, and that's what we've seen on Best Buy. You know what? The funny thing, there's some truth to something like that. If this thing goes into a capitulatory move or something, like you can highlight a couple of numbers back there, the 1741 area. It's right now at 1840, so it's over $1 away from the low. But when you look at the Best Buy, what it did on its earnings, which was a terrible report, it bottomed, and then it immediately rallied after it bottomed. It rallied over $2, I believe, off the bottom that day. So these capitulatory moves can happen. I don't know if you're going to see it here in Hewlett Packard today, but you never know. Sometimes right off the hop, everybody just throws in the towel and then the thing bottoms. But I think long run, I think it continues lower, but eventually there could be a tradable bottom here. You just got to have an out. Use tight stops and don't let this thing continue to drift against you, because every time these things seem to rally, they seem to come with bad news again and they knock them back down.
Yeah, just a final thought on that. 1812 in the pre-market. We've traded over 700,000 shares in it. So keep an eye on that 1812 level. Here's a stock that trades, 20, 30, 40 million, a day, and you're getting it down on 700,000. So not a real significant part of the volume. Another gift for short sellers here. They're looking to cover this stock in, 1820, 18 and a quarter area.
Big Lots reported earnings here this morning. This stock is getting killed here again. I've had my rants on the show on Big Lots. I think everybody knows how I feel about this stock. I've been kind of cutting up. Anyways, I'll give you the numbers first. 36 cents against estimates of 41, so they missed. They're guiding 280 to 295. They were up at 325 to 340, so significantly lowering guidance. I'm telling you, man, I used to shop at these stores. I'm cheap. I go in these stores and you could buy like a box of like aspirin or something that fell off a pallet, and it was like just the box had a little crinkle in it, and you could get aspirin for like $1 or $2. They're starting to sell over the last year and a half. They've been starting to sell nicer stuff. They're like classing their stores up. Their clientele were cheap people going in there trying to get a deal. Now you go in there, sure, you can still find deals, but they're selling classier stuff. They're selling a little more expensive stuff, and not saying they're selling really expensive stuff, but just some nicer things. It doesn't feel like this discount, get a good deal vibe when you go in these stores anymore. And I think that's what's hurting them. I think they have reinvented themselves in the wrong way.
So basically, they got too nice of stuff for you.
I got too nice of stuff for
So
me.
where you go now, man? Garage sales?
I don't know where you. I go to Walmart, where everybody else goes. You go to Walmart.
Jeez. Well, taking a look at this stock in the pre-market, I mean, I can't really tell you if it's overdone or not. You hit 29.97 in the pre-market. Nice round number for 30.
Wow.
Nothing on the charts to really support that $30 level. You do have 28.89 low back in August of 2011, about a year ago. Don't think we're going to see that today. I would be real surprised even if we got down to back to the pre-market low at 30.24. So use that whole 30 to 30 and a quarter levels major support. Coming back on the upside, we've bumped our heads up against 32 a couple times in the pre-market. So I don't think I'd want to be short this stock if we get above 32.
Guest reported here it is lowering guidance as well. So the earnings were 49 cents against 50-cent estimates, so just a slight miss. But the lowering guidance to 215 to 230. Guidance was up at 250 to 265, so that's significantly lower. Stock is down almost 20% here in the pre-market, 28.13 after closing at 33.54. So here's a big washout move potential too. If you go back to late July, 27.67 was the low on the 2nd of August. So I'd keep an eye on that number off the hop, but if it takes that out, I don't see much till 26 bucks.
Are we talking about a market that's at 4-year
You
highs?
know
Or
what?
I
It's
mean, will you
crazy.
kick me aside the
Yeah.
head or something? I mean, what are we talking about here? We're like doom and gloom.
I know. Well, if this earnings season honestly has been terrible. The earnings coming out of the stocks, even think about Apple. They came out, they missed, they lowered guidance. It doesn't matter. They eventually come and they buy the stocks back. Some of the stocks they have been buying back, some of them they haven't. But it seems like the street quickly forgets, and I don't know if it's going to forget on stocks like Big Lots, but on the bigger caps, it seems like they come out and if they didn't like the earnings, they sell them off a little bit, but then they slowly start to buy them up again. And this market just likes climbing the wall of worry, and it continues to ignore the overall fundamentals that this earnings season has been terrible.
Yeah, just got get away from our fundamental rant because we're never very good at that. Uh, 2750 we hit in the pre-market. That coincides with the number that you mentioned back in on August 2nd, 2767. So that's an area of good support. You're correct. If it gets you that, who knows? But boy, that's going to be a tough area. Coming back in the pre-market, just looking at the formation that you have, I mean, with a stretch of the imagination, you could call it a rounding bottom there. Minor resistance would be at the $29 level.
Well, Best Buy in talks with Schulze again. New York Times is reporting. I guess they decided that, well, we don't seem to be able to do very well without him, so maybe we just need to give the stock back to him, and maybe that'll bail us out of this doldrums that this company is in. But $18.30 is where it's trading, so it's up 60 cents in the New York Times article that Schultz and Best Buy are talking again.
Yeah, I just don't see how you play this stock as far as with all this news coming out. Obviously, when you come in short and something happens, he obviously cannot be focusing on 24 to 26 anymore, or else he needs a kick in the head. I imagine he'll come with some kind of rebate, lowering his target price, obviously because the stock has come down. Because there's no way in hell that he wants to pay 24 to 26 for this stock. Looking in the pre-market, you did get a pop up to 1848. I would keep an eye on that level. Really no major resistance in Best Buy until 1920, which was the day, what was that? That was Monday. 1920 major resistance Best Buy.
Yeah, if you start getting up above this whole 1834 area, we were talking about that a couple of days ago. If you start getting above this high right around, I think it's 1834, then you
Mm-hmm.
start to open up till you get to 19. So there is some air above here, but interesting enough, it is finding resistance in this whole 1830 area in the pre-market. So keep an eye on that. If it opens up there and just starts to kill, then that might just hold that area. But if it started to get above 1840, 1850, I think it could make a run to 19. So that's where you have some air, but that 1830 is going to be tough for it off the hop. Your gold stocks here have been on a great run. Barrick Gold, Gold Corp, NEM. These stocks have all been climbing back after having a terrible couple of months, but they bottomed in mid-July and they have come back nicely. And we are starting to come into some resistance areas on a few of these stocks. Like look at this Barrick Gold, Joel. Look at this $38 area in June. It was giving you great support. It eventually did cut through there, but if you hold that theory, that old support can become resistance. Yesterday's high at 37.80 is kind of confirming that that 38 might give you some trouble.
Yeah, well, it's traded above it in the pre-market.
It's right there.
It's actually traded up to 38.22. I'm not sure if there's anything in the book at the $38 level. You have a high back at 38.41 above that, but that's a good area. One thing about gold stocks and gold and GLD, I mean, when it starts to go one way, it goes one way.
Yeah.
And so you really don't want to stand in front of this, but you should be cognizant of the resistance. I also was looking, we were discussing before the show started, Gold Corp. It had this nice formation too. It's running into resistance as well. Trading up in the pre-market. You had a high at 40.44 back on June 14th. In the pre-market, you've got higher than that level. You've got up to 40.70, so there's a couple parameters. But just looking at the chart here, you had the run up from 32.16 in May, and then you make this low here just below that level of 31.54, and it's like they copy and pasted the chart. It's like, okay, here and here again. Well, it's failed here on a couple occasions, so should be interesting to see if Gold Corp can hold this $40 level for at least today or next few days.
Yeah, that formation almost identical from where we had it back in May, where we really ran down from the 41, 42 area, ran down right to a low. I'm just grabbing it there at 32.16, ran all the way back up to top out at 41.24, then sold off, made a low back here 31.54. Now we come all the way back up. We're getting to this whole $41 area again. Upper end of it's 42. I've got to think it's going to start to run in resistance here again. So keep an eye on those levels if you're trading Gold Corp. NEM, similar formations. The stock has had a terrible couple of months, but bottomed right there in late July and has been straight up ever since. And we're starting to come into a resistance area around this psychological $50 level.
Yep, I knew you were going to mention that as soon as I pulled up the chart. 49.84, the high on July 3rd. We're running into that big level. 50 is going to be huge. I bet you there's some size in the book there too.
Probably. You got to think, and that's always these big whole numbers when they come back to retest these areas. Big institutions say, if I think gets back to 50, we'll lighten the load, and basically that could be what happens here. And I think 50 will come into play from a psychological perspective. Let's talk about some of these defensive stocks, because I was just looking at the charts of stocks like Verizon and Coca-Cola and even Procter & Gamble, and these stocks are not looking good. You've got Verizon here, which had a breakdown day a couple days ago through the key 44 support area, really broke down, continued to move down a bit yesterday. What are you thinking about these stocks?
Well, they've all had a heck of a run, and there's been a little bit of, asset allocation to, risk on, risk off. So people are looking at a stock like Apple and saying, hey, what do I need 4 or 5% for when I can, buy Apple and
get 4 or 5% a day?
Yeah, watch it go to 1,000. But anyways, just from a technical perspective, you hit 42.58 yesterday. Didn't close off that level very much. That coincides with some lows that we had back in May. It's actually below those levels. In June, you had a low of 42.80, 42.86. So it looks like it's running out of steam here. I would be looking for major support to come in really under the $42 level at 41.60. But these stocks just kind of creep down. I mean, they don't, they'll have their down days and then they'll chop for 1 or 2 days. Then they'll have another.
They don't sell off
$3-4
in a day. Yeah, nothing like this.
Yeah,
it's too much
not
value.
like the good old days. T, a similar formation. I mean, that's come off. It's come off that high, multi-year high over $38. But really, this stock could have a real washout. 36.44 was the low on July 27th. We hit 36.45 yesterday.
Right.
And then look at that gap area from 34 to 36. And we've talked about it before. When stocks blow through an area like that, on the upside, a lot of times when they come back down through it, you get a similar reaction.
Yeah, if you start to cut through that, you low that you said that 36.44 here, and we are right there, very close to their trading 36.60 in the pre-market. There is some air to fill, and I think you could see this stock down in 36 probably in a hurry. So, especially with the Verizon breakdown the couple days before, maybe your pair traders are a little late to the game. But when you've got one stock in the sector that's very, very correlated with the other one, and it's breaking down, sometimes that can be a tell that maybe it's not, it didn't break down right away, but it could eventually start to break down here. And these stocks are just out of favor. I think if the market starts to roll over and we start to get under 1400, believe it or not, these stocks could start to get some interest again, because this is like your safe harbor for money. You made a great point with the risk on, risk off. When Apple's taking off and going up 20 points a day, people are looking to make some money in this market, and they're taking out of conservative issues like AT&T, like Verizon, and putting it to work in like the financials and stuff like that, stocks that they can move up a little bit more quickly. But if the market starts to get toppy and starts to turn over, then these stocks could start to come into favor again. Just
real quick before you move on to the next thing, and I know we're running a little short on time here. You mentioned pair trading a lot, and I'm sure some of our listeners are very familiar with it. But just could you give just a quick overview on that?
Just basically, pair trading is just one asset or one type of stock that's just very correlated with another type of stock. Like you would say AT&T and Verizon are a pair because they're very similar businesses. If you put the charts on each other, they're probably like 95% correlated, or at least above 90% correlated. You'd say a stock's like Coke and Pepsi, same industry, that would be a potential pair. So when you get Coke having bad news, Pepsi will often move down with it just because they're so closely related. You get all the housing stocks like KB Homes, Toll Brothers, they all tend to move together. Those are pairs, and you have pair traders out there that will literally, when Toll starts taking off, they'll play the spreads between these, they'll play crutch trades off these, but they're basically trading one asset off the other asset, and that's kind of what pair trading is in a nutshell.
Okay, what are we going to finish up with?
Well, I want to talk about IBM too here today, because IBM actually has had some bad relative strength. I actually got hit on it a little bit a couple days ago. I think the market was flat and it opened down 50 cents, and I was like, oh, there's a good fair value play there where I'm buying the stock basically below where I felt it should relatively open. And it kept going down on me, and it bounced back, and I actually ended up just losing a little bit. But its relative strength has not been good the last couple of days. Like IBM is breaking down. I don't know if it's the Dell Hewlett Packard thing maybe weighing on it a little bit. I mean, IBM still has a little bit of a PC business. They're not into that industry nearly as much as they used to be, but maybe that overall sector is putting a little bit of heavier weight on IBM. But the stock doesn't look good on the charts here. We had this whole breakout through the 200. We were even highlighting that maybe IBM's ready to break out. It looks like this breakout has become a fake out here because the stock reversed, cut back through 200, and now the last couple of days has actually just found sellers.
Yeah, I think what's kind of interesting about this stock is that when it made its low in July, it just below, I believe it was 181.85. Yeah, 181.85. That was substantially below the June low. So the market bottomed, and now the market's come back 4 years high. Everyone's pounding the table, and this thing didn't even sniff its all-time high at 210.69. And now you've cut through that major support we were talking about. You had those multiple lows and the high 197s. We've cut through that. Now we're trading basically at yesterday's low in the pre-market. I don't see a lot of really good support in this stock if we do take out that low. Minor stopping point at 196.16, but then you have a steep drop until 193. So don't know if we're going to see that today, but IBM's just acting funny.
Yeah, it is. I think you're going to find if this thing gets back up and starts to have a decent day and rallies up, I think 200 becomes a major psychological resistance area again. I think every rally this thing has is going to probably continue to find sellers here. I'm not sure the reason. Again, it might be the Hewlett Packard Dell thing just weighing on it a little bit. You want to mention Facebook too, Joel. Facebook here, 1945. You trying to call another bottom here, or what's going on?
I'm just looking at the technicals because obviously I don't know the fundamentals. You did get this pattern here going back in June when you kind of had this the 25.52 low, and then you had the rounding bottom, and then you got the pop. Here you got a potential rounding bottom. I was looking at the weeklies, the 19s. Of course, they want you to pay 20, 30 cents over, the actual trading price. So I think I'll just wait for this thing to get back over 20. You have a triple top, 1998, 2013, and 2008. I think you get back above. You want to buy it on strength as opposed to weakness. You see if Facebook can get its face above 20 and hold it for a couple days.
Needs to get above 20. I'm not interested at all in this thing from the long side until it gets above 20. You need to have those reference points. You do have a reference point in place, but this thing has been drifting down, and it's just scary. It seems like every time it starts to look like it's good, somebody, director, seller, or somebody else comes in and downgrades the stock. It's just a scary thing to try to pick a bottom on because you really don't know where the bottom is. It will bottom eventually, but who knows when that is.
Okay, and just looking at the overall market, we did have a little rally last night, got up to 13.18 or 14.18, quite a ways from that now. Just want to alert our traders to just an area of consolidation here. You had the close at 14.12 and a quarter. Tuesday's close at 14.12.50. You had yesterday's high at 14 and a quarter, and Monday's close right in that area. I mean, just a lot of consolidation here, that 14-15 area. We need to get back above that area, hold it, close above the high close of the move, which has been 14-15-50, in order to get back up at that 14.30 area.
Yeah, I'd like to see. I think this is a critical day for the market because you had this kind of 2 days ago. We started to break down a little bit, and then you bounced back nicely yesterday. Obviously, Apple bounced back big time, which helped to drive the market a bit higher. But now you're just kind of hanging out this 14.11 area. I'd like to see it get above yesterday's high there, where we got up to 14.18, or over the overnight high 14.18. I'd like to see us get up there and try to get above there and try to continue this move because we continue to consolidate here, and you also need to see Apple, like just briefly to talk about Apple, you need to see that stock make a new high here today too. I wouldn't want to see a double top form in stock like Apple.
Okay, that's our show for today, folks, and we'll be back with you tomorrow.